up, we have Kyle Greasy with DayDayCook.
All right, thanks everybody for attending. It's nice to see some old friends here. Thanks for the conference organizers for putting this together. I don't think it's a coincidence that they had a food company present during the lunch hour. So this will be a little more interesting in hearing about tissue regeneration from the prior one. So DayDayCook's a U.S. public company listed on the New York Stock Exchange. Obviously, read our SEC filings. The mission of the company is to bring easy-to-prepare Asian food to everyone's home. The executive team's listed here. I'll start off with Catherine. She's the CFO. She has over 30 years of experience, including with KPMG. I came to the company last fall with a mandate to complete the IPO on the New York Stock Exchange, which we did in November, and then to immediately begin on some acquisitions. And as you'll hear here, we're growing primarily through expansion into the US and Europe through an M&A strategy. The founder is Norma Chu. She started the company about a dozen years ago. She grew up in the US. She went to school at UW out in Seattle, where she got a business degree. She went on to become a senior research analyst at HSBC. And so she's a unique founder in that she obviously knows anything and everything about the company and its industry, but she's also fluent with financial and accounting matters. When I met her, back in the fall time frame, I was really struck by her sort of mission and drive and business plan for the company. I think there's a real opportunity here to execute this roll-up strategy and create really an enormous global food company. I started my professional career at one of the big four accounting firms. I then went and practiced law for 20-some years at two of the world's largest law firms, working primarily in Silicon Valley. You know, some of the earlier high-growth companies I worked with included eBay. I did their Series B financing. I sold Chipotle Mexican food to McDonald's. My law firm did work for Facebook before they went public. And so when I met the founder of DayDayCook, I was really struck with some of the similarities between her vision and her business plan and what I was seeing with some of those earlier hugely successful companies. So here's one of the products on the left. Essentially, these are ready to heat or ready to eat Asian food products. The company was started in Asia, and then it expanded into the US last fall with an acquisition of a company called Nona Lim in San Francisco, and then an acquisition of a company that's producing their product in Denver, Colorado, and has employees in Maine. And that company is called Yai's Thai. And then the most recent acquisition we signed up is a company in Italy, which is the beginning of our European expansion. The goal here is to build additional brands for the company through acquisitions, as opposed to developing brands from scratch and rolling them out and all the struggles that can entail. Some highlights here. Obviously, the market is huge, the worldwide market for Asian food products. Recently, and I'll go through the numbers in a minute, we achieved EBITDA positivity. And so we were EBITDA positive the most recent 2 quarters that we've reported. We have a high-quality investor base that's still in the company going back from the pre-IPO days. You can see some of the VC firms listed here: Proterra, K11, Thales, 500 Startups, now known as 500 Global. And the IPO raised about $30 million net on the New York Exchange. So there's some interesting, social dynamics taking place. I mean, when COVID seemed to end and restaurants opened back up, people went out and started enjoying going out to eat again. But everybody was struck by how expensive food was at restaurants. And so there's been this sort of circle where people are now cooking more and more at home, more now than pre-COVID days. And we're also seeing that there's a social trend for people to experiment with new food at home as opposed to at restaurants. It used to be if you wanted to try something new, you go to a restaurant. Now people are much more, innovative and willing to try new foods at home. And there's also, I think, in the Gen Z and the millennial age group, there's a desire for affordable, healthy food that they can prepare and eat at home and prepare in less than 10 minutes. And so we kind of fall in this niche. Our products can be heated up and prepared in 10 minutes or less. Here are some of the brands that we own that are in our portfolio. And the multi-brand strategy, in case it's not obvious, I mean, there's advantages for diversification of risk. And so we'll have brands with Vietnamese food and Korean food and Japanese food and various other Asian foods. It's a really a broad category. It'll provide risk diversification and also broaden the market segment among customers as we achieve some synergies among these brands. You might notice that if you go to like Whole Foods and go down the international food aisle, you'll see literally hundreds of brands there. And those are owned by hundreds of different companies. If you go down the soap aisle or detergent aisle, most of what you see there is owned by 2 or 3 companies, even though they have different brands. And so we see a similar opportunity to kind of roll up and consolidate all these Asian food brands that are now in what's called international or ethnic food sections of the grocery stores. Again, here's some of the brands that we own. Yai's Thai, again, we acquired in January of this year. This is primarily a curry stir-fry sauces that are sold in Costco. And then Nona Lim on the upper right there, that's the San Francisco brand that we acquired. And these are, cup noodle type products. These are sold in Whole Foods. You can drive down Las Vegas Boulevard to the Whole Foods market and buy these products right now. And then Asia Mama and Sushi Mama are brands that are owned by the Italian company that we're in the process of acquiring. So revenue is about $24 million for the 9 months ended September 30, 2023. Pretty strong growth, 26% period over period. Gross margin growing rapidly. And also, as you can see there, slightly EBITDA positive. And these are our most recent published numbers. So here's where we're selling the products. In the U.S., Whole Foods is a big one. Costco is another big one. So let's talk a little bit about the growth strategy. The company was founded in China, and it's been selling products throughout the PRC. One challenge there is that the margins are lower for this type of product compared to the U.S. or in European markets. And so that's driving the need to expand beyond China and into the U.S. and European markets. There's the curry sauce you see there prepared with a meal. I've spoken about most of these, Nona Lim, Yai's Thai, and GLI. And the products are essentially, a kit that you would buy in the grocery store and take home and prepare, add your own protein, add some vegetables. These are not meal delivery kits. It's not like Blue Apron or HelloFresh. So again, the international expansion strategy through acquisitions, we hope to see higher margins. We hope to see some, cross-brand awareness, like the acquisition we did of Yai's Thai. They were selling in Costco, and so we were able to take the San Francisco brands that we bought and are now getting them placed into Costco. So that's just an obvious example of some cross-selling opportunities with these acquisitions. Here's where the products are currently produced. Supply chain, really kind of spanning the globe here. The U.S. ones are produced in the Bay Area and in Denver, Colorado, where the manufacturing takes place. The cap structure for the company is, very straightforward thanks to our recent IPO, which cleaned up the cap structure. So there's just a Class A ordinary share that's outstanding and traded on the NYSE. Total of about 20 million shares outstanding. and then an option plan representing about 10%. There's also a Class B ordinary share outstanding that are held by the founder. They're sort of super voting shares. So to summarize here, there's potential for super high growth with our M&A strategy, with our roll-up strategy here. We are EBITDA positive, which is, I know, a little unusual for a new rapid growth company. So we're not just burning through cash every single month. We have pretty strong financials. The international market expansion provides a lot of opportunity. And we've begun to demonstrate that the strategy works. We've acquired 2 companies in the US, and we have a pending acquisition in Europe, and you'll start to see the results from those acquisitions reflected in our quarterly numbers. So board members, some comps. You know, maybe I'll end it there and leave time for any questions. Yeah. So the M&A is financed through a combination of cash and stock, and it varies for every deal depending on, you know, our needs and the needs of the sellers. The companies that we're looking for have to have an authentic story. They have to have an authentic product. So they're typically run by the founders, and the founders have different needs for liquidity. And we do require in these acquisitions that the founders stay on and continue to run the companies and continue to promote the products. We're not just acquiring brands and getting rid of everybody. We do look for companies where the founders can stay on. The cash is from the IPOs. From the IPO we completed, we also have a bank financing facility in place, which we're also looking to expand. The acquisitions are typically structured so the upfront payment is anywhere from $0 upfront, so it's entirely earnout based, to 30-40% upfront. And so the majority of the consideration for these deals is in years 2, 3, and 4, as opposed to upfront. And again, combination of cash and stock. Another question? Yeah. It's not. It's you know, the customers span all ethnics and nationalities, really. It's not just, say, Koreans living in San Francisco that are looking for authentic Korean food. It's really everybody. It's like, you know, all of us going out for Asian food. And so the customer base is not really ethnically focused, I guess I would say, or concentrated. Well, I think yeah. I mean, I think the products are intended to appeal to a broad range of people. I mean, you know, a lot of us non-Asian people like going out for Asian food. When I was growing up, that was a big treat in our family to go out for Chinese food. It was a big deal. And so if I understand your question right, we're not focused on or just targeting the Asian segment of the market, but we are focused on just providing Asian food. We're not going to sell, you know, Italian food or Mexican food and go after those types of markets. Yeah. Correct. Indian is something we've looked at. And I think if we found the right opportunity, that would make sense to bring in some Indian food products. Yeah. Correct. I mean, there's, like I say, if you go down the aisle of Whole Foods, there's literally hundreds of brands that are typically owned by small mom and pop type companies. And so India is definitely a target. You know, India, Vietnamese, Korean, Japanese. We don't have any of those products in our portfolio yet. Well, it's ranged from 3 million to, say, 20 million in purchase price. And we're also looking at bigger acquisitions, but we're trying to keep them right sized for, you know, where we're at right now. The goal is to grow to be $1 billion company, to be, the sort of General Mills of Asian food. And we're not going to get there buying companies for $3 or $4 or $5 or $20 million. We need to grow to the point where the acquisitions are much larger. We'll get there as we tuck in these acquisitions and we report revenues and show that we're growing and being successful with the acquisitions. Yeah. How many stores are there? How many stores you are at? And how do you think about yeah. I mean, I think we are currently in between, 500 and 1,000 U.S. retail stores between Sprouts and Whole Foods and Target and Costco, which I think span the entire country. I think every state has a store that carries our product. I think it's safe to say. So the distribution opportunity is huge. I mean, there's supermarkets everywhere. And as a result, the market's huge. I think it's worldwide a multi-billion-dollar market, maybe even in the U.S., just in terms of sales opportunity. Other questions? Great. Well, thanks, everybody. I'll let you finish your lunch.